And hello everybody. Welcome back for another episode, If Not Now Wen. I am super excited to introducing our next guest today. His name is Grant Newlin. We are both graduate of Fuqua School of Business as well as U of I alumni. What a small world. Today, Grant is a founder and general partner of Newlin Ventures, investing pre-seed, seed, and Series A across America, both North and South America. Grant brings experience in finance, M&A, deal strategy, and venture capital. Additionally, he is very active involving in a nonprofit endeavor, managing U.S. endowment for search for water and serve for various boards. Today, Grant holds MBA from Duke University and Master in Accounting from University of Illinois. With that, my friend, please join me to welcome Grant to the show. So Grant, thank you so much for joining us today. I am so honored. So let's dive in. Tell us how all the journey started for you, Grant.
I guess technically it started when I was about 9.
Okay.
I was in the Netherlands, actually. My dad was on assignment there, so I was growing up in a foreign country. And I was trading stocks on a dial-up computer, which was costing then was like a couple bucks a minute. It was like very expensive in the early 90s to, get on and dial up. It was very slow.
How do you do that when you're 9 years old?
I don't know. I just was there. I mean, I liked the computer. I was, playing games on the computer, the little disk drives you put in there. And I just was fascinated by it. Right. And at that point, it's like virtual money. You're just making fake portfolios and starting to trade. And
wait, are we talking about games? Actually real portfolio.
This was it wasn't real money, right?
Oh,
so
it's
you
a game.
Can just go on.
Yeah,
Even AOL back in the late 90s, you could just build your own portfolio and you could say, I want to buy 100 shares. You could start with a fake 10,000 or whatever you want. You're just trying to track it, right?
Nice.
And so then it was kind of the .com, right after the .com burst, if you will. And I was really getting into stock trading then and looking at all these tech companies that had gone, Sun Microsystems had gone way up and come all the way down. And so I was just fascinated by it. I remember in high school, I'd eat lunch as fast as I could. And then I go straight to the library and I'd start trading. And at that point, I think technically you had to be 18 to open an account. So it was in my mom's name's account. $3,000, whatever I had to my name that I was making at Potbelly at the time, the sandwich store. And I would go and I would just trade a couple $100 and I would just research and use my old Scottrade account. It was like $9 a trade. That was incredible because before that you can, trading fees were so high, you couldn't even really, as a retail trader, make it. But fast forward from there, going to business school at U of I, studying accounting, working at EY, working in investment banking, doing the Kraft Heinz merger.
And that's what you always wanted to do?
I was always my passion, right? So I was trading all the time whenever I wasn't doing my day job. And really hit it big with Tesla was the big one. So really investing in that in 2012 and exiting in 2020. So it was a 100x exit when I exited.
Oh, wow.
Not retirement money, but enough to help get this fund started that I'm doing now with Newlin Ventures. So always been a passion of investing. So equity investing, whether it's at public level or startup level, many differences, but you're still looking for upside opportunity. You're still investing in the equity of the company rather as opposed to a debt type of instrument. And so, it's been a wild ride. I mean, I really started my career in venture right before getting my MBA after Kraft Heinz, and Nick Moran, GP at Newstack Ventures, said, "Hey, why don't you come work for me? Can't pay you. You'll be the only kid at Duke with VC experience." He was right. I worked for him for almost 2 years. So my first year at Fuqua and then a year prior to that, completely free, learned a ton. And, as I was graduating, the decision was, do I go work for a mega fund or do I do my own thing? And knowing that I had the deal flow, which was kind of step one.
How do you have a deal flow at that point?
Through Newstack Ventures a bit, but I built my own brand. And one of the things Nick always said to me, he's like, Grant, anyone, and I tell this to my interns today too, it's like anyone can take an existing process and go through diligence and take an inbound flow of deals. But if you really want to become good at venture, you've got to go find your own deal flow pipeline, go do outbound, go do that more hunting rather than just gathering approach. So that's what I did. Anytime I came here to Austin for like a bachelor party, I'd come a couple days early and I'd meet with all the VCs in town. And I was just an analyst at Newstack. No one knew who I was, but they took meetings with me. I was respectful of people's time. I asked good questions and just networked like crazy. I think that's definitely one of the biggest differences with venture versus, say consulting or investment banking or even big tech, is you really got to just go find it for yourself and go create it for yourself. And so I encourage that with our interns today too. And we've got some that want to be GPs someday or want to go work at the bigger funds. And you really have to go put yourself out there in venture to do that. So.
Wow, what a visionary. Sounds like you always knew what you wanted very early on, right?
I could never say I wanted to be a VC, but I loved the equity investing environment. Mm-hmm. So just by natural, call it forces of the universe, it led me here.
Okay.
It led me here. Yeah.
So let's talk about after Fuqua, you got plenty of choices. Why did you decide to start your own fund instead of follow other quote unquote golden path of all other fellow Fuqua are doing?
I had seen Nick done at Newstack. I had worked at an investment bank that had broken off from a bulge bracket. They were a startup investment bank, if there's such a thing. And I knew that I was going to be able to capture all the economics. So even on a really small fund, which we have now, it's a small fund.
What are we talking about?
Sub 10 million,
okay.
Right? I'm still capturing like essentially 100% or close to that in the unit economics. I give some out in carry. I can have some fees and things like that. But
you have no investors, just you?
No, I have all my LPs, right?
Okay.
But in the sense of, let's say you're at $100 million fund, and they've got 3 GPs, and then they've got a bunch of principals, and they've got to dish out all that carry. So by the end of the day, you're maybe getting 20% of the carry load, whereas I'm capturing essentially all of that.
Yes.
So, I knew being an associate at a big fund, I was probably going to get 0 carry, probably to start, right? I'd gotten essentially 0 carry at Newstack. So I said, well, let's see what we can build, and I'll be able to capture all the economics, and we'll scale it over time in the right way. So we've really built this brick by brick, starting with the syndicate. Now in Fund 1, we've done a first close. We'll close this fund at the end of this year. Already really essentially soft fundraising for Fund 2, although that doesn't officially kick off.
Already?
It doesn't officially kick off for probably till next year, but laying the foundation with the large institutional capital. We're frankly probably too small for some of the like really large asset managers. I get meetings with the $1 billion, $1 trillion AUM, but they're like, yeah, well, our minimum check size is larger than your whole fund's going to be for Fund 1. So call us back for Fund 2. And so I get that a lot, and that's fine. We continue to build track record. You see a lot of folks, both startups and VCs, that maybe they have family money, maybe they have amazing networks or just have an uncanny ability to fundraise. They can raise funds, but a first fund, raise 50 million, you still have to perform and to get that second fund, right? So performing with the syndicate, performing with Fund 1 is leading us to a Fund 2 that will be much larger, but it's based on real results, not just on an ability to raise money. Does that money return capital back to investors?
What do you think is your secret for the performing fund?
We're really,
based on your experience, from all the investment deal you've done in the past, and now syndicate, and now Fund 1. What's your secret sauce?
Well, I'd like to start with what, frankly, one of my weaknesses is.
Okay.
And that is, I'm not a former founder. The best VCs typically are former founders. Pick Mark Andreessen, right? He's a great example. Also went to U of I, took all his tech to the Bay. Yeah, founder of Netscape. Andreessen, he was a founder, built Netscape, and now he's one of the top dogs in VC. So they've done it before. They know what it takes. I'm a CPA by trade, right? But what I am really good at is being able to kind of take the micro, which is what we're looking at every day when we're looking at individual companies. We're always looking at kind of that in silos, but then layering on the macro too and saying, well, what's going to happen in 5 years or 10 years? That could be on a global economy scale. That could be, at an industry level. And so anything, that we look at when we're investing, we have to say, is this, for example, Web 2.5 or Web 3.0 enabled, such that if some sort of blockchain technology came along in the next 5 to 10 years, the solution they're building today might be phenomenal. But the timing could be off. Sometimes companies are too early, or if they're too late, they could get swallowed by some other new emerging tech.
So look at the micro environment.
Yeah, take a look at it and how that macro sits on top of the micro, and so that's, I'm a big fan of like geopolitics and kind of all the election stuff that happens all over the globe. Like I was watching the El Salvador election results, like that. Those called pretty quick, but he got his second term. That was a couple days ago. So I love to kind of see how that all layers in. And the reason that's important is because we're operating in a more globalized world, even though there's some globalization coming, which we can talk about as well, but it's more interconnected for sure. And it will continue to be like that over the long run, for sure, right? So we can't look at it just as the US, for instance. Yeah.
And for the fund, based on what understanding is you are investing pre-C and C stage venture, right? Those entrepreneurs might not have revenue or might not have profitability for you looking at multiples. How do you able to above from the micro environment and also the timing per se, well, based on really personal judgment, also some number to predict that, but how do you really bet the winners in your perspective?
Yeah, valuations are all over the place and they're different in different regions. So I can get a company in Brazil that's doing, 100K in MRR that's, maybe $5, $6, $7 million valuation.
5x.
Yeah. But in the US, I've seen some that have just a DAC and not even an MVP, but they're .ai based out of the Bay, 20 million valuation.
So how do you see that?
I just don't really like to do those types of deals personally.
You don't?
Because
okay.
I will leave some of those to the Andreessens of the world, the A16Zs, or the Sequoias, whoever, because they can take 10 bets in AI knowing 9 will fail. And as long as they're in that one that succeeds, it's okay, right? We're looking at stuff, ag tech, insure tech, some of these things that are a little bit maybe not as volatile, but
more tangible.
Yeah,
in a way.
A lot of times, yeah. And so having more meaningful traction helps, right?
So you do looking for tractions first before you're even looking at the deals.
Yeah, but a lot of times they are pre-revs, right? So traction, as we define it, is market-based evidence of market-based demand. So that could be really, you could say a proven product market fit.
Okay.
Pilot programs, phase 2 pilot programs, phase 3 pilot programs. We're doing customer calls all the time. So we want to hear from the customers that are using it, speaking to them directly, many of them, why they can't live without this product.
So really it has to have a customer as some sort. Pay or non-pay is irrelevant.
Typically, yeah.
Yeah. And a lot of entrepreneurs are listening to this podcast, and I'm just wondering, for entrepreneurs who are just starting up, what if they have not got to customer yet? Would you advise them to raising capital? Or would you advise them, what guys, go bootstrapped, get a bunch of customers, paying or non-paying, and then talk to us? How do you recommend?
Yeah. If you can get access to capital, say friends and family around, a lot of folks can. We've got one founder that's got a second mortgage on his house right now that he's doing. So, I mean, in the beginning, if you can get some close capital of believers that are willing to fund you, great. If not, then you can still build MVPs on a shoestring budget. An MVP isn't minimal viable product.
Yeah.
So we don't have to have the full thing baked. Do you have something that solves a problem for a particular market and some proof that this is the right beachhead market that you should be attacking? You can do that on a pretty low budget. So
I'm just ask directly. What if founders say, wow, Grant, give me this money so I can build my MVP so I can go out there and get my customers? Is it clear now?
I mean, I'm probably not going to fund it.
Okay.
Probably not.
Okay.
Yeah. Probably.
What would you advise to those founders who are maybe they would think, wow, but I'm building something very, very large. I mean, yes, I have friends and family. I got my own mortgage, but I can't possibly do it without support, institutional support. What would you say?
You can still go and talk to customers. You can still do market research, get testimonials. You can do all sorts of surveys. You can figure out what the market needs. You can... If you're really crafty, there are ways, but you got to be think outside the box a little bit. And it's different for different industries. If you're building a CPG product, it's really hard because that's non-tech and that takes a lot of infrastructure and capital to build out. So we do some CPG. It's tough, right? You're going to probably need some capital there. But if you're just building a consumer app, you can spin one of those up for $50,000.
Wow.
And as long as I mean, typically, right? I mean, I'm not a developer, but you can get pretty cheap, you can at least build something.
Yeah.
And even white papers are great. Some founders come to us like, yeah, here's a big research study we did, or a white paper on this industry and what their pain point is and what the current solutions are, and how we could fit in to solve some of that.
And I'm curious, as you yourself, sorting so many deals, also along the past experience, people come to you, right? How do you, when you look at folks who are approaching to you with a new opportunity, what are you looking at? Is it the founder? Is it a deck? Is it the ability to sell? What are you looking at them?
Yeah, a lot of it's the founder, right? Some VCs, they say it's up to 80% or whatever. I mean, that can be the case for us. Have to have a market big enough, right?
How do you define big enough?
Well, we'll do a bottoms up SOM, SAM, TAM. For the home gamers, it's SOM 1 year, SAM 3 year, TAM 5 year.
Okay.
We'll do often a PAM on top of that, especially when we're looking at international companies.
PAM stand for?
PAM, potential available market. And that is essentially, if you think of the TAM as like, say, maybe just the US, if you've got a product that could be sold globally, we would then layer in that as well.
And what is a big enough market number-wise?
Well,
so people have some references.
Yeah. Rule of thumb for us is around $1 billion. But that's kind of like minimum. And it really comes down also to the valuation of the company. So that's why we're very price sensitive. So if we get in, we have to have every one of our companies have the ability to return the whole fund, which means essentially a 30x net return on any particular deal. That needs to be possible. So if the market size is 500 million and we're getting in at a 20 million valuation, and even if they capture 100% of that market, it will never be a returner for us.
Oh.
Yeah. So part of it's entry price.
Yeah.
And then a lot of it's, what and that market size becomes an issue a lot of times in LATAM, in countries like in Ecuador, Chile, smaller markets. So how do they expand outside of that?
Yeah.
We've got one in Chile right now that's working in Brazil, doing great. One in Ecuador that's working in Mexico. But
why South America? I'm curious.
A lot of reasons. It's a bit of the next frontier for venture. A country like Brazil is almost as large as the U.S. They've got a massive consumer base. They receive about 2% of the venture funding dollars as the U.S. does. So whereas here you've got a lot of companies that get funded that maybe shouldn't, just because of the abundance of capital. A lot of companies in Brazil, for instance, in particular, and in LATAM and in other emerging markets, a lot of companies should get funded that just don't. There's not enough local capital. So, we see massive opportunity from valuations, an ability to diversify outside of the U.S. within our venture portfolio, which is important to us. And then there's some bit of kind of, reshoring, nearshoring. There's a little bit of that we look into, but at the end of the day, there's a lot of connecting points from culture, between the Americas, as we call it. So that's North and South America, right? Even if you look at the U.S., like the Latinx population in the U.S. is like the 6th largest consumer group in the world, like bigger than the U.K., I think now. So you can look at that as like one demographic within the U.S. that's still, U.S. seen as more that Anglosphere, but there's so much. A lot of crossing going between these countries. And
I'm curious, a couple questions for that. Number one, when you invest in them, do you invest in the foreign entities or U.S. entity of those foreign businesses?
Yeah, that's a great question. There's of the U.S. investors that will invest in LATAM, the vast majority I've seen will only do a Delaware onshore or some sort of Delaware Cayman sandwich, they call it, right? To avoid tax and things like that. In Brazil, I love to invest directly. I'm working on I'm almost approved for my CNPJ, which is their version of an LLC. And so then I'll have my business entity there and we can invest directly in. And I like to do that because although I'm not a currency trader, FX trader, the Brazilian currency, the reais, against the dollar is the spread is 5-1. And historically it's been about 2 to 3 to 1. And so,
wow.
Yeah. So actually I believe now you're playing a little bit of a currency game there, but it's clear to me, at least we'll see if I'm proven right or wrong over time, but the risk is more towards a compression of that spread over time. And so so we love to invest in anything directly in Brazil, and it gives us an advantage against, say, some of the other American funds. A lot of these pre-seed seed companies, they don't have the resources to do in Delaware, and if they're not ever building for a market outside of their home country, there may not ever need to be. Yeah, so we're happy to invest directly in Brazil in particular. Argentina, we can't do it. You've got an inflation still nightmare, even with new leadership. You've got laws such as foreigners cannot pull money out of their banks and bring that money, bring money out. So we have to be very mindful of this stuff. Ecuador just had a coup. Like, there's all kinds of risks in all markets.
Understood.
You know? So, yeah.
Wow. You are very knowledgeable about that. I love that. I'm curious, because you're working with so many foreign entrepreneurs, almost half a portfolio, if I should take a guess, I assume that some of them will want to come to U.S. market, some maybe don't. Any advice for those foreign entrepreneurs, maybe who want to come to U.S. market? How do they think about really grow and scale their business in a foreign world, and they know it's the next for them?
Yeah, it's a little bit case by case. GymPass is an example that kind of launched in essentially two countries at once, based out of Brazil. We've got one right now that is doing really well, raised Series A in Brazil. It's a consumer product company, and Rafaela, the founder, wants to move to Boulder here in the U.S. probably next year with her husband and her kid, and blow this out at Whole Foods and all the types of U.S. retail, which would just massively open her up. And so, it kind of depends. If we've already got native tech built here that's supersedes whatever, or is also very focused on the U.S. market, you may not ever want to come here. A lot of people just want to come here just to get to the U.S., but there's enough bite on the apple to do that in LATAM, I believe, as well. Mexico, Brazil, Colombia, Argentina, these are big markets. So you can prove it out there.
Yeah.
Case by case, I've seen some do it really early and go for it and start jumping around whether it be within LATAM or to the US. In other cases, we love to see proven traction, maybe even a profitable business locally, such that the risk of entering a new market, even if that failed, wouldn't necessarily suffocate the domestic business. Brazil in particular being a special case, and then, kind of US, Canada being separate from what we would call, like, say, Spanish-speaking LATAM. So we'll see, like, a lot of the Spanish-speaking LATAM companies won't go to Brazil for a lot of reasons. We've helped one do that successfully so far, but you start to get into culture, language, regulatory issues that are much different in, say, a Brazil and US versus, say, a Peru and Ecuador.
Wow, I can see that. And I'm curious, Grant, now reviewing back a little bit back to yourself, I'm curious, what's your vision for what you're doing now, or what you're doing in the next 10, 20 years? Is this what you wanted to do?
Yeah, I've done enough jobs that I didn't necessarily enjoy fully.
What do you enjoy about what you do now?
Let's just say, as compared to working at a big company, which you've experienced, I know, I'd love to hear your take on it too with Dell, right? I mean, you make an impact there, but it's harder to sometimes see, right? The direct result of your work so much, right?
Yeah.
Whereas I'm working with these founders day in, day out, sometimes late at night. Yeah, and you can see it right away. And, and you're making a really big impact for some of these founders very quickly.
Do you feel like people are born for this certain kind of job environment, or is it like nature versus nurture, like entrepreneurial spirit? Do you think it's born with it, or it depends on your experience?
I can only speak for myself. I think everyone's capable of anything, frankly.
Of course.
Right? So, and the part of it then is, what makes you happy, to what you talked about. Some people would rather have a really big paycheck that's guaranteed. They work, they know what they're going to do every day. They know how much they're going to get paid, and they're very satisfied with that. And that's very, very solid. We need those people, right?
100%.
We need all sorts of people on all different ends. I think what I've noticed is there's sometimes a gap between some folks have big visions to be entrepreneurs, but they have that hard time getting from 0 to 1.
Why is that?
If you're always just visioning, you still have to be tactical day in, day out, grinding and like actually doing the small little things that sometimes you feel like you're spinning your wheels, but you're in the trenches, you're just building, right? And then you've got that other end of the spectrum where you have folks that just build all day and they're building great tech, but they don't even have a market or know what problem they're solving with it. So being able to combine those two, your skill set, being able to build something that's valuable to society, as Naval Ravikant talks about sometimes from AngelList, and then having that vision too. So, I mean, for us, the vision is to just keep what we're doing and scaling it. I love what I do. Helping founders and bridging this gap between the Americas is really special for me. So I don't see myself leaving that anytime soon.
Why is it special for you, Wen?
Well, we talked about the world and how it's changing. It's becoming more polarized, but also more integrated at the same time. So, when we can help founders, break through geographic barriers, if you will, I think that is pretty special.
I love that. I feel like essentially you are helping those amazing men and women living their version of American dream or / global dream. Let's call that. It's not even about America.
I like that.
And I felt like that's what I, felt so passionate as well. I think maybe that's why I felt that represent is not just America or global or Brazil. It's not about the country. It's about the possibility. Yeah. The possibility to dream, also making it happen.
Right.
That's just so exciting.
Totally.
What do you, one day, Grant, we're all gonna long gone.
Yeah.
What do you want the world to remember you by? Or you think about if you have like a death stone, like a capstone, what do you want to say there? If any.
I'm pretty typically more under the radar. So being out, being famous for something is not necessarily. If I died tomorrow, I'd be a happy man. Let's say that.
Wow.
Yeah.
That's
at
big.
this point. I couldn't say that 5 years ago. Not even close. So.
What's a big difference because of fun you start?
Yeah. And other personal life choices that I've made that this job has allowed me to do as well. Yeah. Like
traveling, meditating, yoga.
All that stuff, especially when you come to Austin, that, you get a lot of that. Physical health, mental health, all that, right? Yeah. Which can be hard when you're working for some other entity that is, I was working on average 100 hours a week. Sometimes I put, 110, 120 back to back for 4 or 5 weeks. Yeah.
That's insane.
Really bad.
How do you, people say that, I feel I don't believe them, but 100 hours a week.
Yeah.
Do the math. That's 20 hours a day for 5 days.
Yeah. I remember
That's not possible.
I remember I put in, excuse me, I put in, I think 40 hours by, what was it, end of day Tuesday or sometime early Wednesday. I'd stayed through the office the whole night. So, yeah.
Is there a point, do you think that it's important for you to go to Fuqua? Because after all, you start your own business. How do you see that?
Yeah, that's ironic, right? A little bit.
Not so much. I'm curious, what do you think?
Well, it's a great network. It was a reset. I was kind of pigeonholed into corporate finance at the time. So I needed a reset.
Yeah.
So
we all do.
Yeah.
What was your favorite?
You know what that's like. Yeah.
What's your favorite memory, if any?
Leading the students on the first ever VC trek, which I brought the VC club to in New York and Austin, actually.
Oh my goodness. Wow.
Yeah.
You did not even hesitate. I love that. I for me, it's not as magnificent as that, but I do remember when I, first walked in the Fuqua, I saw this like big long hall with all the flags, and I just something about it. I just feel so connected to all of us, and it's just something very special in my heart. At least that's every time I meet another Fuqua, another Blue Devil, alumni, I just always have a special place for them.
Well, what was so cool too is you've got such diversity in the class, and people have worked on oil rigs off of Africa or in tech in Europe or, so anytime you go into a class, somebody's like, oh yeah, that case we're talking about.
Yeah.
I worked actually on that project. Here's
so
what
cool.
happened, so it's it's pretty cool.
Yeah. Don't you think that right now what you do, like in a startup space, in the VC space, kind of like a field core experience? Because you are diving in a new case every single business. You are meeting new amazing entrepreneur dreamers who, vision a big world. And it's exactly that. The excitement of it.
Totally.
Amazing.
Totally.
Great. I'm curious, for entrepreneurs who are listening right now, who may be in the trenches, like you speak earlier, maybe who are, building and may feel like they are like spinning a wheel, or maybe someone who are dreaming about the big vision but cannot make the 0 to 1. What advice you would give to those entrepreneurs who may be a little bit earlier stage and feel a little stuck?
Yeah. Small victories, right? Little victories. If you see Mount Everest in front of you and, you're like, oh man, I'm never going to get there, right? But if you're like, all right, one foot in front of the other, I can make it up 10th of the way up the mountain, and you take the time to celebrate those small victories and then use that as fuel to make the next step. And over time you look back like, oh wow, look at how far I came, But I know, at least for me too, I can get stuck if I see something when I was like, oh, I got to raise a fund. How am I going to do this?
Yeah.
And it's like, okay, well, let's start. I've raised before. I had an angel network. Let's start raising. Okay, we got some checks in. Okay, we did a first close. Okay, that's good. We're about a third of the way there. How am I going to get the rest of the 2/3 closed in this fundraising environment where first time, fund managers funding is down 90%, I think, versus last year? I mean, people are telling me that have been in VC for decades are like, yeah, this is the worst time we've ever seen for this market.
Yeah.
So, I mean, I don't know. I just keep going, right? And we make it work, and, no quit mentality is good. You don't want to be just bashing your head against the wall and running in circles forever. So, you do want to start get those small wins, low hanging fruit. There's always something you can do to that's like meaningful traction, right? In any business, I feel like.
Well, 1,000 miles journey start the first step.
That's right.
That is beautiful said. Anything else you want to tell our audience before we let you go, Grant?
I've been telling the founders this lately. It's tough out there. We got an election coming up. Don't give up, right? Again, if it becomes evident that what you're doing isn't working, you need to pivot. You need to pivot for sure. And that's okay. Founders are going to pivot often, frequently, right? That's good. And what do they say like Facebook, fail fast, fail often, right? Those things are going to happen. So don't just keep digging a hole, figure it out, find a new way, find another. Same thing in Brazil when I'm even just trying to it's taken me a year almost to get my, my LLC set up. And it's like, okay, well, I could just like sit back and like, oh, I don't need this or I don't want to do it. But it's like, no, especially in Brazilian culture too, there's a lot of bureaucracy. And it's like, well, there's a way, find a way, keep going. Maybe you got to go around it. Maybe you got to go over it. Maybe you go under it, but keep going. You'll find it, so keep going. Yeah.
How do you know the difference between give up now versus you digging yourself a hole?
That's tough. Each founder's going to have to kind of go with their true guiding light with that and what's in their heart and what's in their head.
Yeah.
But, if you're at something for years and years and you're not making any progress and you haven't really pivoted either, then you should start to ask yourself, well, is this working, right, in its current form? And maybe there's a light version or another form version of it, or maybe you can take the learnings of the failure, right? A lot of founders we see it all the time, especially with younger founders that are maybe still an undergraduate, for instance. It's like, ooh, they got this company, they're asking for funding, they're so young, so green. This could be one of those founders, and we've had this happen in the portfolio even where company failed, right? But their second, third, or fourth company could be very successful. And they might take those learnings from their first failed company and go off and raise a future successful in a successful environment. So, people are going to fail. It's okay, right? If we never failed, we wouldn't grow either, right? So
I love that. Yeah. I love that. Where can people find you and anything that you want to make sure people know to find you into deals, fun things?
You can go to my website. It's in process of overhaul, but you can find me there. You can find my email there, grant@newlin.vc. You can submit on our form on our website, email me directly. Happy to get in touch with any founders or anybody who just, wants to chat. So any of your audience. So
I will share the information in the description here. And again, truly, thank you so much, Gwen, to coming here to share the journey. Wow, what an exciting process for you to not only sounds like finding yourself, but finding a way to connecting, uniting America, south to north, and helping all the amazing dreamers live their global dream. So thank you for all you do, and thank you for coming here, share your insight.
It was a pleasure. Thank you.
Amazing. Well, thank you so much, everybody, for tuning in today. We hope you enjoyed it as much as we did, and we cannot wait to see you all next week. Bye, guys.